Hello, everybody. We are going to start a webinar. Just we'll wait for a minute or so, and then we'll get going. Okay, I think it's already 4 past 1 minute, so we are going to start now. So let me welcome you all on behalf of GIZ and the Ministry of Housing and Urban Affairs. I myself am Narendra Verma. I work as a technical advisor, and I represent GIZ here. And we are very happy today to organize this very interesting session on next gen payment technologies, especially in public transit. So we have a very interesting panel today. We have Miss Thea from Visa. We have Mr. Denny from NPCI. We have Masabi also. We have ONDC here. And the session will be moderated by Mr. Ravi Gadipalli. So I welcome everybody to the webinar. It's been a topic which has been very close to me from start. And if you'll see the payment systems in general over the last decade has evolved a lot. I'm not talking about only this in regard to transit or mass transit. In general, also, if you'll see, advent of blockchain and all today are challenging to the centralized banking system as well. So it'll be interesting to hear from our experts in the panel how this technologies are going to impact our payment systems in mass transit or public transit in general. Uh, uh, I'll just take a minute or two to talk about what we are doing at GIZ, and then I'll hand over to Ravi, who will be who will be moderating the session. So I represent a project called Sustainable Urban Mobility. So what we are doing basically is that we are working with Ministry of Housing and Urban Affairs, and it's a technical cooperation project which is funded by BMZ. And we are working with 4 states. We have recently added one state more. So in total, we are working with 5 states now. We are working with Gujarat, we are working with Kerala, Odisha, Karnataka, and recently we've added Meghalaya. So in total 5 states, and we are working with 2 cities each in these states, and we are supporting municipal corporations, transport department in these states on topics of sustainable urban mobility. So I'll not take more time here. I'll hand it over to Ravi to start the webinar. And yeah, once again, on behalf of GIZ and Mahua, I would like to welcome all the experts and thank everybody for attending the session. Looking forward to the insights from experts. Over to you, Ravi.
Yeah, thanks very much, Narendra. Hello, everyone. Good morning, good afternoon, good evening, wherever you are joining us from. Thanks a lot for making the time to join this webinar. So as Narendra mentioned, so payments is fundamental to running public transport and the way it runs. So it is, of course, a very important topic and a much discussed topic. And there are several pathways towards digitization of payments. The need for digitization has been recognized across the board. The users want it, the authorities want it, the operators want it. But how to achieve that is something that we are all struggling with in different forms or different levels. So some cities have, for example, the Delhi Metro has achieved 78 to 80% people using smart cards, which is significant upgrade. On the other hand, we have many bus systems where so the best bus system, which is the BEST bus system in Mumbai, which has the maximum digitization, has achieved about 18% people using digital payments. And out of that, Actually, 13% of the people apparently pay by cash to load their smart cards or mobile payments. So the penetration of digital payments in bus systems has a long way to go. Metros are slightly ahead, but even there is much more to be done. So, so there is a given that the topic is much very important and has been recognized, we thought it's a good opportunity to discuss about how to go about it in India and hopefully some of the other geographies people have joined from. Um, on the way forward, on what are the different technologies available in front of us immediately and what are coming up in the future, and also how to reach there. So a lot of times we focus on what is needed, what the users want or the cities want, but how to reach there is something we'd like to focus more on during this session. So there are smart card based payments which have been more established, and mobile technology based payments which are coming up only recently. And we are lucky to have some of the best brains on both the topics joining us today. So without uh, much ado, I'll start with the speakers. Maybe I'll first start with Mr. Denny Thomas from NPCI, National Payments Council of India, who has done the most towards digitizing payments in India. So maybe I'll request Denny to start. So if you can give us a high-level overview of how NPCI is going about digitizing payments in public transport, that'll be helpful. Thanks. Denny?
Thanks, Ravi, and thanks for having me for this panel discussion. Just one small clarification before I start off. NPCI is National Payment Corporation of India.
Sorry.
So this is the umbrella entity which was created by RBI. And the single purpose of creating this entity was to digitize the entire payment ecosystem. And so it's transit and tolling happens to be one of the integrated, one of the most important components of this ecosystem, and that's something that as NPCI we have kind of taken initiative. Tolling was something which we started off way back in 2015-16, and now that almost 98-95% of the entire tolling is done on FASTag, and it is like totally revolutionized the way Indians pay tolls, and this is like one of the largest happened in the country. Similarly, on the transit side, we had introduced NCMC, National Common Mobility Card, which was launched officially launched in 2019. But I would say the real implementation started from January 2023 when MMRDA line 2A and 7 metro lines implemented NCMC. And after that, there were all the other metros Chennai, Bangalore, Kanpur, Delhi. All these metro adopted NCMC. So basically, the implementation was started only in January 2023, and that's why we have not seen too much of progress taking up. Uh, Also, in the metro space, we had the brownfield projects and greenfield projects. So when I say brownfield, Ravi, as you mentioned, Delhi Metro already have a 60-65 closed loop cards, smart cards, right? So these were all brownfield projects where already a closed loop card was already existing. And then Mumbai line 2A and 7 totally greenfield. And I'm happy to share that in both these projects, we are almost touching now 40%. So what Delhi like has done over a period of 10 years reach a 50-60% penetration, we are now already kind of reaching 40% penetration in these greenfield projects. So the adoption has been very good. Right now, the focus is how do we kind of convert the closed loop cards into NCMC card, because finally these NCMC cards are going to be the only option for an interoperable payment method, right? Most of these cities now we are activating the buses for NCMC, these interoperable model being adopted across all the other cities also. So Mumbai, now we have line 2A 7 metro projects. Mumbai line 3 has just gone live 2 weeks back. NCMC will get implemented by this month end, and Best Buses is already live on NCMC. Similarly, in Delhi, DMRC is there, NCR in a few months' time. So is the case with Bangalore, Chennai, and Hyderabad also. So this is the power of NCMC, where with one single card, the computer use this that gives them the flexibility to do it. Uh, uh, while implementing, there were two things that we figured out was the friction point right now. The first was obviously closed loop card issuance, smart card issuance, right? Where no KYC was required, where no KYC was required, whereas NCMC is issued by banks and non-banks, where at least some KYC was required. Working out with MoHUA and RBI, and RBI was at least, they were accommodating this entire request from MoHUA, wherein they extended MTS PPI issuers. So when I say MTS, Mass Transit System category under PPI, you don't need a KYC for issuance of transit card. So that's something that has worked for us. So these are the innovations happening. CMRL has already installed instant issuance kiosk of NCMC cards in 15 stations as a pilot. So you just go there, you click one QR, the card is instantly, dispatched. So this is something which is going to kind of really propel the growth of NCMC. Top up because these are stored value cards, and this was again, when I say stored value, a lot of people do have a comparison with account-based ticketing. The only challenge with account-based ticketing is there has to be a need in order to kind of work account-based ticketing in the country. So that's one of the reasons why MoHUA had adopted a stored value-based kind of a model for NCMC. And the biggest challenge for us was how do you do a top-up, because the balance have to be written on the card. So there also, right now, the current infrastructure is there are add value terminals where even if you do a online top-up, you have to go to the add value machine and place your cards and kind of get balance updated. There also, in this GFF Global Fintech Festival, we launched another feature where customers can, if they have an NFC phone, they can do a easy online top-up, and offices, they can kind of simply do the balance update on their card. So these are a few of the innovations that we are looking at, and kind of believe that this will really pave the way for a greater adoption for NCMC system.
Okay. Thank you, Danny. So some of the actually while you were breaking, the network was breaking up. So when we come back to you in a few
Oh,
minutes, if we can somehow find a better network, that will be better. Otherwise, we'll just continue with this. So, but thanks for the
sure.
initial inputs. That was very insightful. So we'll come back to some of the points later on. So on the KYC and the need for stored value versus account-based ticketing. So we'll come back to that point once again. So now I'll move on to Thea Fisher from Visa, so who I had the pleasure to meet once. And so Thea, you explained a lot of uh, experiences across the globe about how things have been advancing on transit payments. So if you can tell us how Visa enables transit payments overall, and then give your feedback on how you see the NCMC versus some of the other best practices across the world. What else can be done? So it'd be great to hear from you on this. Over to you.
Wonderful. Thanks so much, Ravi. And it's so great to be here. And thank you so much for the invitation. I really appreciate it. And we are so excited at Visa about what's happening in the transit space in India and the transit payment space in India. We think it's such an exciting market with such incredible opportunities, and seeing all these amazing infrastructure investment projects from just the EV bus initiative and all the incredible work that Denny and team have been doing on NCMC is really inspiring. Um, so we get a lot of questions about, why does Visa care about urban mobility or a global payments network? Why is this important to you? And I think from our perspective globally, if you can't, we have a mission to uplift everyone everywhere by being the best way to pay and be paid. And if that doesn't extend to a transaction that often is the first transaction people make in the morning and the last transaction people make at night, then we would be really failing to deliver on that mission. So we really want to make transit payments easy for Visa cardholders everywhere. And also for the infrastructure and ecosystem that we support, from our member acquiring banks to our issuers, as well as to tech companies who might use some of our value-added services to deliver on their work in the transit ecosystem. So Visa's had an increasing role and interest in this space ever since Transport for London launched the first multi-modal open loop acceptance project, which was about 10 years ago. So I think we're coming up to the 10-year anniversary of when that launched on the tube. It launched initially on the buses, which is great. And since then, we've seen over 830 open loop acceptance projects go live worldwide. So it's a really incredible growth since then. And that's in all 5 regions across the world. And we're seeing really amazing growth. And we see great tailwinds from those launches. So we see happy customers and passengers. And a couple of years ago, we did some surveying work pretty recently. And I think we surveyed 3,000 transit agencies. And of those who had implemented open loop payments, they saw on average a 9.5% increase in ridership, which is really just an incredible amount. And fundamentally, we think that when ridership, if public transit increases, it's likely that congestion is going to decrease and that sustainable outcomes will be driven at. So, anything we can do to help shift passengers from maybe a private car or a taxi or maybe a tuk-tuk in India to a public transit method that's going to be more sustainable is going to help drive towards the net zero commitments that we in decarbonization that we so deeply believe in. So we, as a sort of program in terms of what we do in this space, many of you may be familiar with, in terms of open loop payments, we have a specific transit payments framework, which is 3 different methods, but the one that I think tends to get the most airtime is the Mobility and Transport Transaction Framework, or MTT, which allows passengers to tap their open loop card, their contactless card or credential, and then travel around while those transactions accumulate and get settled end of day, so that you as a transit agency or operator can really offer a best fare guarantee or some kind of fare capping program while still letting people use a payment credential that's been on their person. So something that we're really passionate about there is, and then the reason that we've lent in and developed that framework and worked really, really closely and continue to work closely with the ecosystem to make sure that it remains appropriate as consumer behaviors, as passenger behaviors shift, is that we want paying for public transit to be as easy as paying for a cup of coffee or a cup of chai. So however that works, just making that passenger experience really, really easy. And to that end, I think we've seen great growth there. Now, one area that we have lent into further over the past few years is really looking at, given our experience in north of 830 different open loop implementations over the years, have we seen consistent struggles, and can any of our value-added services help that? And one that has seen a lot of growth in that space, and I think really solves pain points that are pretty specific to the transit ecosystem, is our payment gateway CyberSource or Visa acceptance platform, which some of you may be familiar with. And in fact, in our fiscal year 2023, we saw a bunch of different transit implementations, open loop implementations of just Visa acceptance globally, and 41% of those also use CyberSource, also known as Visa Acceptance Platform, to help deliver them. And actually, Giacomo on the call is from Masabi, and we work with Masabi closely in some of those implementations, which is great. So we're really looking at ways that we can help transit operators innovate. We can help tech partners and acquiring banks in the space maintain profitability as well as the end merchant. And we can help smooth connectivity issues that this ecosystem can run into as they seek to implement that's kind of the next generation of payments experiences. Now, Ravi, I think you asked also about NCMC, and I think at Visa we are just so impressed with everything that has been accomplished in terms of NCMC. And Denny, such a credit to you and team. It's amazing what you guys have accomplished in such a short period of time. We really hope that open loop payments in India can coexist alongside NCMC. I mean, we really think that consumers should have the ability to choose how to pay for their public transit, and NCMC is such a phenomenal initiative, such a great user experience, and we've seen that success and continue to see that success. So we really hope that open loop acceptance and tap to ride can just coexist alongside that, where consumers have existing contactless cards or credentials that they'd like to use to pay to purchase public transit. And that's what we see in London with Oyster Card. That's what we see in New York. That's what we see in Singapore. So we really believe that a great transit payments experience for riders involves giving consumers that choice in the coexistence of different schemes that suit different consumer choice. And I think we'd love to see more of that, obviously, in India.
Good. Thank you, Thea. So we'll come back to you as well later on in the conversation on some of the points you raised. So first, to the audience, this is not a broadcast. This is supposed to be a webinar. So please feel free to share your thoughts or questions on the chat. And whenever possible, we'll ask the questions to the speakers later in the session. So with that, from the cards-dominated discussion so far, we'll move on to the mobile payments-based conversation. So maybe I'll go to Nitin first and then to Giacomo later. So first, Nitin, can you please broadly explain what ONDC is, basically demystify it a little bit, and what you have done with DTC? We've seen news on that. So if you can explain that a bit, then we'll get a flavor of how it works.
Thanks, Ravi. Can you guys hear me?
Yes.
Fantastic. So I think, setting context, ONDC, Open Network for Digital Commerce, is a Ministry of Commerce, Government of India backed initiative for increasing digital penetration of transactions in e-commerce in India, right? And as we built out several domains, we've also got a significant amount of presence in mobility, which spans across auto taxis, ride hailing to DTC as Delhi Transport Corporation, as well as to two metros live and most of the large metros under implementation. Two metros that are live, Chennai Metro and Kochi Metro. So essentially, structurally, to look at what is ONDC doing in this space is, we broadly operate on two principles, unbundling and interoperability. What that essentially does is that, let's take ticketing as an example, right? We fundamentally take away the ticketing between the ticket issuer, in this case, a metro or a bus agency, a bus transport corporation, and a customer issuance agency, which in this case, as we call the buyer app. So essentially in the ONDC structure, all transactions are unbundled and interoperable between a ticket issuer, which is called a seller app. So DTC, the metros are all seller apps, and then there are buyer apps, which are essentially agencies that bring in the consumer. And it could be any mobile application, which will, fundamentally bring in only consumers and focus on a software layer to do ticketing and, make it easier for consumers to be a part of the story. So at a structural level, ONDC is not just about, ticketing or mobility. The same structure does retail, the same structure does financial transactions such as credit and insurance, the same structure does mobility and transit equivalents. So that's broadly it. So from an overall structure perspective, ONDC is a very asset light model. I mean, when you look at what's the value proposition from an ONDC side, most entities need to do just one software integration or software project to build sort of a connector from their infrastructure to the ONDC network, right? And they need to be compliant to the ONDC protocol, as we call it. And then other third-party entities can start issuing their tickets as QR code or another form factor from a buyer app, which is probably a mobile app, or any other interface which they can use to, sort of get a ticket issued. The ticket, it can be a voice ticket, it can be, a QR ticket, it can be an SMS, depending on whatever form factor the two entities agree on, right? Now, one of the things that this entire structure does is that because it's software led, it's fundamentally cost efficient, because once you join the network, there isn't any ongoing costs or any costs that you need to do. Of course, there are costs. It's not that not there, but structurally, the cost structure is very different because there is no hardware involved. Having said that, the other advantages would also be that you would not only do, say, the transit ticket that you're buying, right? You could buy the first mile and last mile, which could be another transit mode, for example, a metro plus a bus, or it could be, a metro plus a, two-wheeler bike taxi or a auto or a, a cab or any other mode or a tram or a ferry or whatever that, works for your city, all from a single buyer app interface. And each of these entities that join do not need to be interacting with each other. All of this is seamlessly simplified by the ONDC network and usage of the ONDC protocol. The other thing that ONDC also simplifies is this is not just about the ticket issuance and payment, right? This is also about route availability, schedules, timetables. All of this information also is seamlessly, available on the network. Like, for example, if you're at a metro, a buyer app is not just issuing a ticket, it also has access to, say the GTFS data on the metro's, stations, entrances, schedules, and equivalent, right? As well as, say, the bus operator, where you have access to, live inventory tracking, live availability of buses, etc., which also, adds value. And above all of this can be also beyond the entire customer experience can be also beyond mobility, right? For example, you could be using the same buyer app to buy some grocery on the way home, right? Or order food that you can pick up from a transit station or where you get off, right? All of these transactions are available using the same ONDC protocol and the ONDC structure, right? So broadly, those are the general directional principles that we use. We are very early. We went live with our first metro in Feb, right? And DTC went live, I think, 2 months back, about a month back, right? So very early in our life cycle. So still figuring out, still learning, learning from all the other existing options that customers have and how to continuously add value and continuing to solve.
Thanks a lot. That's a lot to cover in 5 minutes. So thanks, Nathan, for explaining all of that. So thanks, Giacomo, for patiently waiting until we get done with other speakers. So now I'll go on to you. So if you can give us a brief introduction about Masabi itself and how you see the digital payments ecosystem globally and in India, and what can we do more? Your opening remarks on it.
Sure. Thank you, Ravi. So great to be on the webinar today. Thank you so much for inviting me. Looking forward to learning from some of the questions that will come through today as well. So why don't I start with a little bit of a summary of Masabi and our products and services, and then move on to some of the trends in the market. So Masabi is a UK company. We offer fare payments as a service ticketing for urban transportation. This is a service that we make available to transport operators and agencies worldwide. So Masabi has developed a back office platform called Just Ride, and today we're implemented with over 250 transport agencies worldwide. We're processing over $1 billion in US dollars in gross annual fare revenue, which equates roughly to 15 million journeys monthly. So we focus on enabling account-based ticketing through our multi-tenant cloud native platform. We support a range of different technologies and media types to enable account-based ticketing. For example, contactless bank cards, mobile ticketing, and smart card as an ABT token, as an account-based token. So in terms of Just Ride's, Maasabi's Just Ride offer, it's really conceived to provide an alternative to traditional design, build, operate, and maintain procurement model, which is really shown to be quite costly to agencies and hasn't really favored innovation. So in the traditional design, build, operate, maintain model, we've seen sort of cities need to prescribe the technology and go through a lengthy technical specification process, needing to raise a big initial capital investment to build a brand new solution from scratch, which then, of course, needs to be tested and debugged before it can be utilized. And this really means very large timescales and a large investment. What we tried to do with Maasabi is we provide an alternative to this. We took our sort of 20 years of experience in fare collection and worked on creating a single cloud-based platform that services the common denominator that is common to all transport operators around the world and make that available as a service, so that transport operators simply need to subscribe to our existing platform and we can configure the variations that they might need so that they can go live in a much quicker time to market as they're subscribing to an existing platform, which is tried and tested. It saves them investment because they are subscribing to a multi-tenant platform, meaning that we create an economy of scale across the different operators that are using our platform. And through our software as a service model, we can guarantee continuous innovation and updates. So we sort of contrast ourselves to that traditional procurement model with our fare payments as a service solution. So examples of deployments that we've made include citywide implementations, like in the city of Denver or Pittsburgh and Las Vegas in North America, where we provide a full range of different media types and technologies to serve the full demographic of ridership in those cities. So deployments have included contactless bank card, mobile ticketing, and smart card. In other environments, we've provided a multi-operator solution. For example, implementations in Spain, in the region of Galicia and Guipúzcoa, we've provided a solution that is interoperable across many operators. In other environments, we've focused on mobility as a service, enabling Citymapper, Uber, Lyft, TransitApp, Meep, MoveIt, and a whole series of MaaS platforms with the ability to sell rides for mass transit through their interface. So our focus is really to enable partners to do what they're good at. So we're very focused on the fare collection components and enable MaaS partners to do their journey planning and integration of other modes. And we work with other partners in the system integration space or in the payment space, like Visa, for example, as Thea was mentioning earlier. We're deployed in a lot of cities processing payments through their platform. And in terms of other references, in some environments, we also deploy only a single module. For example, mobile ticketing, we're present in New York and in Boston, where we've deployed mobile ticketing for the commuter rail there. And we enjoy over 70 and 80% respectively in those accounts of adoption. So the majority of users using mobile as the way to pay for their rides, which really goes to show that you can fully digitize the ridership with the right simple and intuitive user experience. So in terms of the market shifts that we are noticing in the market, the key trends are really seeing agencies starting to offer more digital media types and moving away from plastic and paper and towards mobile and contactless bank card mainly as the main media types. Secondly, I would say the transition from card-based to account-based ticketing. So previously we saw a lot of the intelligence written on paper or plastic, and increasingly we're seeing customers just using what they have in their pockets as digital tokens, and all the intelligence is happening in the back office. Generally, the shift from cash payments to digital payments, I think everyone's familiar with that. And then, as I said earlier, the transition from design, build, operate, maintain towards as a service. So transport operators can subscribe and go to an existing platform. And then moving from closed monolithic systems to more open platform type approaches, where different partners can integrate with the fare collection system to provide more of a tailored solution for the agency, while they are still benefiting from the software as a service platform. So an example of that could be maybe integrating to existing custom front end solutions, hardware, as well as back office services that might be already in place in a brownfield environment or custom for a greenfield implementation. That's kind of a high level overview of Maasabi and how we see market trends. I think you asked Ravi also about how we see reality in the Indian market and MCMC specifically. I'd almost sort of double down on what Thea said earlier. For us, it's really around the user experience and the use cases. So as we look to serve, the full demographic of riders with the right type of fare media, it's kind of horses for courses. It kind of depends which segment we're looking at. So maybe a tourist arriving at a city for the first time may want to pay in a different way for transit versus a commuter who takes the service every single day, is familiar with the city. They might be more interested in maybe the status of the service, the delays, the passenger information, alternative routes. They may be more incentivized to download an app and get real-time updates versus a concessionary holder, maybe an elderly or a student who has a special discount. They might benefit from having a car. So it really depends on the different users as far as we're concerned, and what the split of ridership is across those different use cases. Maybe I'll pause there. I think I've taken up more than 5 minutes, Ravi. So thank you so much, and I'll hand back to you for any questions.
Yes, we have a few. Thanks. You covered a lot of things. So one thing that a lot of our cities would like from what you explained is that it's a low capex and more opex oriented and outcome oriented procurement, which is interesting. So maybe I'll stick with you for a couple of more minutes and ask a follow-up question on this. So on the procurement itself, so for a city to procure this versus procuring the standard way of procuring ticketing devices and a banking partner and something else. So there are cities going that way where they are unbundling everything. So where you have the hardware procured from somewhere, bank somewhere else, so that they want to de-risk their overall investment. If one of the partners doesn't work, the rest will still work and they can replace that. And you are proposing the opposite of that, where you say you just go with one partner and low capital and you take care of everything. So how do you see that?
No, so actually we don't provide the full solution. I say we are very much advocates of the modular procurement that you described. So we provide our solution on an open platform basis. What we mean is that we provide the back office components, and then everything else can be plug and play. And in that sense, I think we could, where we think the market is going is towards more modular, towards enabling agencies to replace or change maybe their validators, change maybe their acquiring solution, change their CRM, or whatever it is they need to change, in more of a plug and play type reality. This gives them more flexibility so that they can innovate more rapidly, but also avoids vendor lock-in. So for example, if they want to change their gate line, they have a new station, they want to introduce a new media type, they have the flexibility of doing that without having to change the full end-to-end system. And I think the key consideration, the procurement there, is really making sure there is the right service boundary for each module, so that the back office has the right APIs, SDKs, interfaces to be able to integrate seamlessly with various, for example, ticket vending machine or or validator, and conversely that the validator is being procured in a way that can have this plug and play capability and has the right interfaces, and that the agency has control over maybe the host application that needs to be modified to accommodate different capability in the back office. So absolutely, we advocate for modular.
Perfect. Thank you. That's very good to know. Thanks for clarifying that. So maybe I'll go to Thea next on a question on account-based ticketing. I mean, Giacomo is tired, so I'll let him take a breather, and I'll come to you on the account-based ticketing. So one of the reasons why NCMC or in India there is a little bit of resistance for account-based ticketing is that people perceive that it requires a lot of network bandwidth and it may not work sometimes. And the other thing is about the risk of failure of payment. So if I may not have money in my account and I'm using my card continuously, so that's a risk to the transit authorities. A lot of authorities don't even want to take that risk. On the other hand, there is also a debate that for that limited use case, you are negating the benefit to everybody else. So my question to you, Thea, is how do you see this? And then are there examples of other cases where the network bandwidth, etc., have been solved through some mechanism?
That's a great question. Thanks, Ravi. So I can't comment on kind of the use of NCMC and the infrastructure and bandwidth that supports that. But from an open loop account-based ticketing perspective, I think if we just talk through the payment flow for just a second, and I know you used London before, and I'm going to use it again because maybe it's one that more people are familiar with. But when you take your contactless card or your XPay, so let's say you've got a Visa sitting in your Apple Pay, and you tap on at a gate in on the tube at Transport for London, a couple of things happen. So the first thing is that the gate line says, is this card within expiry? Has it expired? Okay, no, it's not expired. Has this card been lost or stolen? So what we'll do is it will check a locally stored deny list and says, oh, is this card on the deny list here? And if it's not on the deny list, then the gate lines will open and you'll be allowed to travel. So, and you'll tap in, and then during the time that you're traveling, an AVR is effectively a nominal value authorization is going to be performed. And if that comes back with a decline, say you have insufficient funds, your PAN, that card is going to be added to a deny list for that merchant's Transport for London. And so and you'll tap out and you'll be allowed to leave the closed network. When you next try and tap into the tube, your card is going to be stored on a deny list that is held at the point at the gate, in the validator within the gate. You will not be allowed to enter the network. And in the meantime, what's going to happen is a number of automatic debt recovery attempts will be made on behalf of the merchant to recover the outstanding debt. So, and on top of that, there is what's known and provisioned, and it varies by region and by country. But as it happens, and this is one of the reasons I chose London as an example, is that there is a shared liability limit in place, which allows for a certain amount of a first ride risk, it's often referred to, so that even if you can't make that payment and there's no the debt recovery fails, a certain amount will be, if the transaction's under a certain amount for that first trip, it will be honored to the merchant. So that first risk is downside protected against in some markets, and it's based on agreements between local issuers and transit agencies. And so there's sort of a protection and a scheme in place in some places that allows the merchant to choose, the transit agencies and government entities to choose to accept open loop payments in that model with a certain amount of risk protected against. In terms of the infrastructure and bandwidth constraints, it's a great question. When you come to upgrading a large transit network to include open loop payments and to build out an ABT system that will apply fare calculation in a manner that is going to be aligned to your existing fare structure, maybe a new fare structure, that's obviously a really significant investment, and it takes a lot of careful design and thought about that user experience. In the case of some places where we've seen bandwidth constraints, we do see strain just based on the really, really high volume potentially of transactions that you get at, say, a really congested area at rush hour. So tons of people tapping in and then tapping off around the same time. And if you think about the way that people work, the way that a transit system works in terms of those peak times, you can imagine there are a lot of transactions coming in. And that's one of the places that we've seen CyberSource and Visa Acceptance Platform be deployed to really help by effectively where acquirers and back office ABT providers can leverage Visa acceptance solutions, transaction per second capacity for their acquire processing. That can really, really help alleviate the strain that can be felt in with some of those implementations. So we do see really creative use of existing solutions and modular services that exist out there in the market today to alleviate the strain that some of that can the shift to open loop can create in terms of bandwidth constraint. And then I guess the other thing that, one of the questions I saw in the chat was about shifts that have happened in the past 10 years. If we think of TFLs, it wasn't the first open loop payment experience, but the first big multimodal system to go live. And I think that's really where we start to look at, okay, 10 years ago, you had very, very low token penetration. You didn't have a lot of mobile payments solution usage out there in terms of what passengers were going to be doing. And today, that's obviously not the case. So you're really designing a system for a different set of consumer behaviors, rider behaviors, and you need to think about that payment experience and designing that experience in line with what those behaviors are today and also what they're going to be. And we know how procurement cycles work. A lot of where Masabi's amazing success has been that Giacomo was talking about is in that shift in procurement process and shift in terms of consumer behaviors and what really a modern tech stack looks like and how that can be implemented in the transit space. But I think that really looking at what will those experiences look like in 5 years' time if I'm beginning a procurement process today for a solution that will go live in 3 years and still be running in 15 years. How can we look at taking a sort of more productized approach, solution as a service approach to that consumer experience so that riders will be able to travel in a way that benefits them and that they'll be wanting to pay for their transit in a few years' time, not just today, because these systems need to last and be able to flex with that consumer shift in behavior.
Thanks, Tia. I think we have missed the whole consumer discussion until now. So eventually, it's the users that we are all trying to solve for, and their behavior has been changing, and we need to update ourselves around that. So, Denny, I'll come back to you on a couple of points that have come up so far. So on NCMC being expanded to other platforms also. So so far it's been predominantly RuPay from what I understand. Do you anticipate expanding that to other platforms? I mean, as users, we may have other cards. I know RuPay is the largest used card in India, but there are still others who are using other cards and they may benefit by expansion. And also on the account-based ticketing. So when it was designed originally, we understand why it was a part of it needed to be closed loop and stored value. But is there a plan to expand it to become an account-based system eventually, or is that not initially? Is that not an immediate priority?
Yeah. So thanks for that question, Ravi. And I'll try to kind of just go back to the history once again, because a lot of people MOA. So typically, way back in 2013, when all the metros started implementing their closed loop cards, that's when MOA system, so that a single card can operate in any of the transit operators, irrespective of which part of country they are operating. So that was the original thought from where, I mean, one nation, one card. That was the entire discussion. And MOA had called at that point of time everyone. So it was not only NPCI, Visa, MasterCard, all the transit operators, they were all kind of called in as to how work. And believe me, as NPCI, we never had the specifications of a stored value product at that point of time. We were had the similar contactless specifications, which worked on an online basis. So MoA was very clear because as Thea, risk of first ridership will always be there in the account-based ticketing. And whatever mechanism we put across, there has to be someone who will take that risk. So as Thea knows, out here, this question was open to everyone, to the networks, to the issuer, to the acquirer, to the transit operator, and no one was willing to take that risk. And that was the only reason I kind of suggested. And as NPCI, and since no one was willing to work on this, as NPCI, we worked on it and we created those specifications, which eventually got implemented across. As NPCI, we were pushing it out as a stored value product, right? So, and if we look at this ecosystem today, also when this question is posed, who is going to take that risk? Today also product is something which is there. So extending it beyond RuPay, it's a call for MoA, not for NPCI, because we have already kind of dedicated this specification to the domain, right? The second part of your question was on the account-based ticketing. So as Thea said, that from a user perspective, we have to look at how mode, because people are having their existing debit cards. It could be on a Visa, it could be on a MasterCard, right? Now, the biggest challenge is how do we implement? And if you would have observed, now the good part about these implementations, say for example in TFL is only one single authority which is managing everything: tube, buses, ferries, everything. Deny list is a small list which gets populated, and it gets populated across all their modes of transportation. The challenge in India is this deny list will not be a solution. And just to give you some reference point, today FASTag has a deny list of almost I think uh, uh, otherwise it was almost to the tune of 3 to 4 crores. Okay, now this 3 to 4 crores have to get populated. So today these 3 to 4 crore tags is populated in each toll plaza across the deny list in, and the metro gates have to kind of process this deny list. It's going to be a nightmare, and none of these transit operators are in putting this. So the moment that then we only open an account-based ticketing model to say a few cards or a few bins, then it's not going to serve the purpose. So these are the few practice is very unique to India. And unless and until if we resolve these challenges, I think, I mean, I'll be more than happy to kind of implement an account-based automatically. I mean, irrespective of the fact that it is all RuPay cards have a stored value proposition, customer has to activate it and get it done, right?
Yeah.
So implementation of account-based model can be always like, I mean, we can always talk about it, but it will not be. So it's like, if I have to give a parallel example, the from a tech perspective, it is the most simplest and simplest of thing to implement. But the enforcement, because the moment we are saying it's a GPS-based tolling, you will not have gates at the toll. We have a free flow tolling. What is the enforcement mechanism that is put into place? As of now, today, no one has the answer. So if we are able to answer these challenges, then the implementation is the discussion point.
Got it. Thanks. So I'm here to ask questions and not give opinion, but one thing I would still want, I'm itching to give is that, so the thing is, if you ask cities, do you want to take a risk? I don't know if they will come up and say, yeah, I want to be the one taking the risk. So like you have mandated NCMC, I think national level call has to be taken on who takes the risk and implement it at least in one city, figure out, and then maybe we can do it in the other cities. But anyway, so there are experts deciding that, so we'll leave it to them. So Nitin, one question from me to you, and then we'll ask the audience's questions to everybody. So on one hand, one of the issues for card-based systems has been the MDR, the merchant discount rate the banks charge on the user, and the unified payments interface that has basically broken this thing about MDR, and there is free transactions happening. And that's one of the reasons where mobile payments are more attractive to the user and the authority also, because if the authority doesn't pass on, they have to take the hit on the MDR. So how do you see that happening, and how do you see ONDC or the payments you are enabling integrating with NPCI and CMC ecosystems? Is this a parallel system? Is it an integrated system? How does it work?
I mean, I would start by saying it's an independent system today, but it will be an integrated system in the future, is how we would want to envision it. It can't exist in isolation, right? It has to be a collaborative approach. There are different use cases, different modalities that come into play. I think fundamentally, see, we are a framework, right? We are not the one issuing the ticket. We're not the one issuing any of this. And even payments structurally, both entities can collect. The buyer apps on behalf of the consumer can collect the payment, or if the transit entity wants to collect payment, both flexibilities exist. My sense is any costs on this will be eventually passed on. It may start with maybe one of the entities absorbing costs. Costs will need to be passed on, right? You need a stable long-term business to be built. There are costs associated with will have to be considered, and there has to be consideration available for whoever is coming into the system. For example, DTC has very clearly said that any additional costs, any buyer app commissions will be chargeable to the consumer, right? And I would say I'll go back about 10, 15 years ago when the utility payments came online the first time, right? Most of them used to charge the customer the convenience fee, right? I think we will also start like that. It will be free for some time, then there'll be a convenience fee, and then eventually the benefits will start, outweighing the cost, and therefore perhaps the convenience fee will not exist, because if you typically look at it, any digitization will mean a lot of costs being offset. A counter, your tickets being issued, physical hardware, cash movement, all of this is going to start coming down. So my sense is this will go through a life cycle, starting maybe free as it is in some of the metros. It will then move to a convenience fee where the consumer is charged. As it kind of picks up, starts becoming material, 10, 15, 20, 25, 30, 40% of the tickets in the long run, then the cost structure will become something that the entities will be able to subsidize. That's how I would, presume that this will kind of play out.
Thank you. So I'll start picking up some of the questions from the audience. So there is this question about mobility as a service. Maybe Giacomo, I'll request you to respond on that. So in the cities where you have worked, supported cities purely on just as a ticketing solution for the public transport versus a mobility as a service, how did you see the user acceptance growing? Does it grow at all? Does it not impact, or how does it work? And what are the costs? We are not sure of the extra cost associated with MaaS versus integrated ticketing.
Sure. So we've seen a couple of approaches on mobility as a service. We've seen cities that have built their own mobility as a service applications, and they've had to invest into building a new platform, integrate various modes, and create an interface to plan, book, pay for your ride, and then make that discoverable to the citizens. So a large marketing effort. And that tends to be quite expensive. In other environments, like the project, for example, we did in Denver, we kind of looked at, okay, instead of building a brand new application for the city, why don't we take a look at what mobility apps are already installed on users' phones and what mobility apps are already being used. Customers already have their accounts and their credit cards registered in them. We noticed in Denver, we did a study and we saw the most popular apps were Uber, Lyft, and the Transit app. Transit app's a popular journey planner in North America. And we said, well, why don't we integrate ticketing into those apps and make mass transit a new option? So that citizens can use their favorite app. Maybe it's an Uber app because they are taking lots of rides on Uber, and then suddenly they discover that their travel A to C can be broken up in A to B on an Uber ride and B to C on a mass transit bus or rail service. And giving that choice then to the customer through these apps means that they discover mass transit on a ride that they previously perhaps didn't consider it. And so that's really been a very interesting journey for transit agencies because they haven't had to make such a big investment. So really exploiting apps that are already in users' pockets and enabling them with the ability to sell mass transit rides through those interfaces. So those are kind of the two main experiences we've seen. One of them is more around creating a city experience as a bigger investment and having control and ownership of the data and the payment relating to those the riders using the app of the city versus giving up some of that data to third parties, then enabling a whole new segment of riders, increasing ridership in return without having to invest so much in the platform. Does that make sense? Those were kind of the two approaches we've seen at Masabi on MaaS. And the way we've enabled it has been really to provide interfaces, APIs, and SDKs to party apps to sell rides for mass transit.
So just a quick follow-up, yes or no type question. So is MaaS always positive? Has there been any case where you did all of that and still didn't work, or some learnings from there?
Yeah, I think the learnings really for us has been in environments where we've done this, there's been a much more effectiveness in using the apps that are already out there. That's the learning we took away. In terms of how much they get used, I would say they are certainly very popular. Never the main way in which customers are buying rides on mass transit, but still a significant slice. And I would say the most effective implementations have been the ones where we exploit what riders have already in their pockets, already registered. Right. Find out what the popular mobility apps are, enable them. It's the same concept we're doing with ticketing, right? So let's use what customers already have in their pocket, a mobile phone and their bank card. Just use what's already there, right? And focus on, as a transit agency, focus on creating a better ride service rather than building big digital infrastructure that could already be out there and you can use.
Got it. Thank you. So there's a question from Jayashree on the procurement approach. It is posed to Giacomo, but I am curious to ask Thea this question about so in an evolving ecosystem where there is a trend towards mobile payments or something else, how does the city plan for the next 5 to 7 years on which technology to procure? And bigger than the procurement issue, how do you see the overall ecosystem panning out? There is discussion about tokenization. So even if you have a smart card that can be tokenized and included in a mobile phone, is that the way forward, or how do you see the future of cards in general?
That
Great.
Was that for me or for Thea? Sorry.
It was the audience asked you, but I want to get Thea to answer this. Maybe come back.
Over to you, Thea.
Thanks, Giacomo. It's a great question, Ravi, and I think it really comes down to starting out, I think, by taking a really holistic view. Where are we today? What are we procuring for today? And where are the points of flexibility? So if you choose to procure and design a flexible solution where there will be the opportunity to bring in new payment methods, then you are building in a certain amount of flexibility. And so we really approve of a sort of, or I shouldn't say approve, we don't have a horse in that race, but we've seen great success with a service-based approach. So where a government entity will say, or a transit agency or operator will say, okay, this is the solution we want, and these are the experiences that we want to enable, and you tell us exactly how you're going to do it. And we've, I think, seen, and we haven't seen the contract come to fruition yet, but we saw the award in Ireland of a national project where they took that approach very recently. Really, really kind of exciting and flexible way to run that process. And I think it tends to lend itself to more productized solutions where you're getting a platform from your supplier, much as Giacomo was talking about, rather than a design and build, traditional design and build solution, although they all have their place, you know, and I think one way of affecting that outcome is in designing requirements in a way where you say, I want to know what alternative, and on the payment side, what are the potential alternative payment methods or APMs that will be brought in here? And saying, you know, and really focusing on that consumer flexibility of choice, building it into the requirements, and then looking at the different ways in which different service providers and responders will be able to deliver. So we have seen really interesting, more modular procurement approaches, or where that encouragement of modularity is actually pushed onto the responders. And I think that's a really nice way to affect that shift. One of the things that I think we've seen increasingly, and I'm kind of zooming out to say the past 5 to 10 years, but maybe a little bit more recently, is a shift from really large CapEx upfront expenditure to a more OpEx-driven model on the part of the government approaches and the procurement approaches. And that does tend to lend itself towards a more modular approach where you're looking at sort of how things will scale up and what will the costs look like as the solutions get larger and that scales up with increased usage. So I think those are kind of a couple of different ways to look at how that can be a solution could be designed for sort of 5 to 7 years down the line. But I would go back to just really emphasize the point that starting up front and looking at how are people paying today and where do we expect them to be paying in the 5 years down the line when this contract is still in place, when whoever we award this to is still going to be providing and operating this service. And I think it's really interesting. One of the places we see immediate open loop usage is often with tourists, where you get, tourists like to use open loop payments. They travel around, they get off, think about this. I think there's a new rail line from the airport in Mumbai. I think you get off the airport, you've already got the credential in your pocket. You don't need to know what you're doing. You just need to follow the signs to the train. You don't need to speak the language. There's a kind of universal language of payment. And what will that look like, in 5 years, in 7 years? And it's really trying to understand that consumer behavior and mentality and prepare for that. Because it may sound like a kind of a nice to have, but actually it will have a huge difference in terms of driving effective decongestion of a city or of a system. And so really building that user experience in upfront and letting the requirements be informed by that.
Thanks very much. So maybe Denny, a couple of questions from audience, on the participants, I should say. So to you, basically. So one on the tokenization that has been discussed previously. So on people want to validate or use their cards on the mobile. I mean, you may want NCMC because you want a stored value for the reasons you already explained. You still want an NCMC card. But is it possible to tokenize it, put it on a mobile, validate it online? So that's one question. And the second question on the pay-as-you-go service, as London calls it, or the mobility framework, transaction framework that Thea explained earlier, where at the back end of the system, you keep track of all the transactions that the user did, and then cap off the payment at a given point. You don't need account-based ticketing for that. Even within the RuPay card, you can do that, right? So are there any plans to get into that at all? So tokenization and the pay-as-you-go service.
Sure, Ravi. So I'll information is available on RuPay. We were one of the players to kind of launch that in our GFF this year. And that's something that we want to just clarify it from our regulator. The moment we are talking about stored value, and say for example a customer, I have a car now. As per the regulator, the limit of the stored value is 2000, which is defined by the regulator. So in the card also I have 2000. Now when I do the tokenization on 3000, so overall for a customer level it will be a 4000 limit. So this is some gray area that we want to just clarify and kind of then launch it in a very full in a full manner. We have not yet launched it properly only because of this particular clarity that is required from the regulator. Pay as you go, this is something at a transit operator level or what do you say, a city authority level, right? From a implementation perspective, that can very well kind of, I mean, solutioning perspective, all these things can be implemented. So tech is not a problem, but this is more to do with the policy level where the transit authority will have to. So for example, tomorrow, if you pay say 100 rupees and you travel in any of the modes that are there, metro, DTC buses, anything. So since that framework is not right now present in India, we don't have a solution for it, but as a technologically, this can be implemented easily.
Good to know. Yeah. So we have 4 minutes left on the session. So maybe I'll request all speakers to take a minute and give us your closing thoughts or direction for the future. How do you see this ecosystem going forward? What should the cities do towards it? So we'll go in the reverse order. So maybe we'll start with Giacomo first. So
Sure, absolutely. I mean, for us, actually, that one of the questions earlier is really key for us. So I think, with design, build, operate, maintain, which was the old way of procurement, we buy what we know of the world today. And then you're stuck with that for 10, 15 years. If we think, what did bank cards look like 15 years ago? What did your mobile phone capabilities were 15, 20 years ago? You can start to get a sense that's really outdated. And with the pace of technology growing into the future, it's going to get ever faster. So how can we deal with this? And I think for us, it really comes down to a few key principles. The first, I'm almost going to repeat what Thea said earlier, is really go down an as a service route. So you align the incentives of the agency with the supplier, and you have a supplier that has a continuous innovation model. That's the first point. The second is outcome-based procurement, where you really get vendors to focus on the business outcome, and you allow them to define the innovation and the technology of how to get to that business outcome. So, for example, you want to reduce the cost of fare collection by a certain amount, given certain technical constraints, maybe with this gate line, but give the freedom to the vendor to define how they're going to achieve that. So you get that innovation. And then thirdly, and lastly, is the modular approach. So by splitting up the solution into different modules, you can then have the flexibility of switching out different components. If, for example, you procure a back office that's focused on calculating the best fare, regardless of the token, then the token becomes a problem of the validator. And then whether it's a bank card, a smart card, or in the future, it might be a contactless ring or glasses or your sports shoes with a chip. Who knows what's next, right? But it's the front end that needs to deal with that, and your back office can still run the same fare calculation because you've separated the concerns out in a neat way that allows you to have that flexibility and to continue being innovative. So the 3 points for me are as a service, outcome-based procurement, and modular.
Great. Thank you. Nitin, what are your closing thoughts?
Well, I think it's exciting times. Digitization is definitely, there's a lot of precedence on how that has had transformative experience. Denny's here. So UPI and NPCI is a very, very big story globally on what digitization and a software-led layer could do. Hoping to replicate that. And also the fact that we're looking beyond payments, the entire ecosystem around schedules, availability, multiple modes, right? All of that coming together. So we hope that all of that kind of adds to customer commute being simplified and made it convenient, and therefore have a fairly positive impact on also on growth of the overall transit modes rather than just standalone digitization. That's what I would think would be critical.
Good. Thank you. So Thea, over to you. So.
I think, thank you so much for the opportunity today. This has been phenomenal. It's a great conversation. And I think just coming back, we emphasis on consumer choice. We do hope to see some open loop ABT experiences in India, very much alongside the NCMC user journey, and hope to see consumers having a choice of how they want to pay for rides, and really emphasizing both looking at what existing services, when you're looking at designing a new ecosystem for the future of payments and transit payments, what existing services exist that we could take advantage of. It's not necessary to reinvent the wheel on some of this stuff. And obviously, I would posit that CyberSource or Visa Acceptance Platform can often really, really help simplify that, and help provide a more profitable service for the transit operator and ecosystem providers as well.
Thank you. So Denny, over to you.
Yeah, so my closing remark would be it's a very simple thing. As payment professionals, we tend to kind of push a lot of our ideas to customers, right? And we tend to believe that these ideas are basically coming from them. But my experience, especially in the transit ecosystem, after discussing with all the transit operators, is very different. So there are very specific problems which are pertaining to India, especially when we come to the transit operators out here and the customers. And today, while we just kind of solved a lot of these problems for the metro operators, it's the actual bus operators who would be now tested with all our solutions, because that's where the real ridership is. That's where the real India will come into picture. And as payment operators and professionals, I think we need to address that in a very holistic manner, because eventually, as Thea said, it is finally the customer's choice. So today is one form factor, QR is another form factor. QR predominantly today is happening on a paper QR, right, and not on mobile. So digitizing that becomes a very, very important agenda for all of us. While the overall impact would be on ridership, but I think India would also see the impact basis the leakages that today happens, and most of these transit operators actually, especially the bus, badly, and the experiences from other areas of digitization, especially the tolling experience, has showed us that any strong implementation gives direct benefit to everyone. So that's something that we wish to achieve with this entire initiative.
Got it. Thanks a lot. Thank you, Denny, and thanks to all the 4 speakers. We could not have asked for a better session today. So thanks a lot for sharing all your insights. And so we'll not leave it here. We'll try to convert this into a knowledge product and hopefully build on this and continue the advocacy for digital payments. So with that, I'd like to thank the audience, thank the speakers, and also thank Zora, Faraz, Manjunath, Narendra from GAZ, the previous two colleagues from GFA. So thanks. They have been key to organizing all of this, and thanks to the audience and the speakers for participating. So thanks very much. So with that, we'll conclude. Thank you.
Thanks, Ravi, for having.
Thank you so much, Ravi. Take care. Thank you.
See you.